Steve Gantz here, and welcome to the weekend update for June 1st, 2025. So the first thing I'm going to do here is run through our various indexes, but I want to give you a heads up. After I run through these indexes, stay tuned because based on my analysis of the index, I'm going to give you a trade concept or a trade idea to maybe consider for the couple of weeks going forward. Of course, everything I put out there is concept. It's for educational purposes. It is not a trade recommendation. I'm not a certified financial advisor, and I don't know your unique circumstances as well. So all of that said, let's start taking a look at our markets. First of all, here with the S&P 500. And one of the things you'll note here on the S&P 500 specifically is that we're not yet breaking above this 6,000 point. We've had a very, very strong run for sure, but we do appear to be chopping a little bit sideways now. This line right here is our 200-day moving average. We've come down and touched that and bounced off it, which is a bit of a bullish sign. But again, we haven't popped through that 6,000 range. So I'm envisioning a range right now in that 5,800 to maybe 6,000 range on the S&P. We had some very solid up volume in the S&P 500, which is definitely a bullish sign. And then we take a look at SPY. Of course, SPY is going to look exactly the same because it is 1/10 of the SPX. So this is all going to be essentially the same. The 200-day moving average, we bounced off 600 instead of 6,000. And if somebody were to trade the SPY, they might look at a range in that 575, 580, up to 600 range in SPY. We take a look at volatility on SPY, and it is coming down. It is not quite at all-time lows or all-time recent lows, but it has certainly dropped off after it had spiked a little bit early last week. So VIX is telling us that there's not any significant fear in the market right now. There's not a lot of people buying insurance, if you will, in our markets right at this point. So right now the fear subsided a little bit, which means that we're more likely to chop sideways or go up. At least that's what big money seems to be thinking right now, as they're not buying insurance. Take a look at the QQQs, and we have a very similar pattern here. Here we are firmly above the 200-day moving average, and also we're in a similar sort of a channel here in that 530 to probably around the 505 range. So my expectations there is possibly to stay in the channel. One thing to note here, our relative strength indicator, RSI, is still pretty high. That indicates a little bit of maybe an overbought scenario. Combine that with the fact that volume has been picking up a little bit on those down days, and that could be a little bit of a bearish indicator here on the Qs. We look at volatility for the Qs, and it is coming to pretty much an all-time recent low. So that kind of flips us the other direction, basically saying, yeah, there's not really fear in the market. People aren't thinking we're going to go into a pullback right now on the Qs because they're not buying that insurance. Of course, the buying of that insurance is what spikes this higher, because when they come in and start buying a bunch of puts, that essentially raises the volatility reading on this chart. So let's look at the same on IWM. So take a look at IWM, and IWM is well below its 200-day moving average. It has not poked through it in quite a long time. So IWM is definitely the weaker of the three indexes. It also appears to be in a range here in that 212, maybe down to around that 200 or 195 range, somewhere in there. And same thing here, though, we are seeing that on those down days, volume is a little bit higher, which tends to be a little bit of a bearish signal. And if we look at volatility, though, it's not back to its all-time recent lows, but it is certainly down a little bit. So again, kind of same thing here. So we do have a fairly moderate week of different news that's going to be coming out. And of course, news is driving this market at this point. a new tariff coming on, a tariff going off, a country that the deal may not be solidified or the deal may be changing, can all change the complexion of this. There's also a Fed speaker or two coming out this week also. So there can certainly be news-driven events that are going to change this market. Short of that, what might I consider from a trade concept or a trade standpoint? Well, one of the things that I would probably personally tend to look at is maybe some sort of an iron condor type position that might bracket that 6,000 down to that 57.75 range. So just some sort of a general condor that's going to allow the market to chop back and forth in that general range might be a good logical trade to consider at this time. And because news is driving this market, I don't go out too terribly far on those. Okay, so if I think a condor might be a viable trade to consider here, let me just come in and I'll come here to Iron Condor. And I'll go ahead, and this is 15 days out right now. I might go out a little further than that. I might go out to the monthlies here in June. That's about 20 days out. And this is what modeling up of an iron condor might look like. Again, I can, of course, adjust these. Now, remember, I had said that I might consider being somewhere between this 6,000 range and maybe come as low as 57.50. So if I come back here and so I'd come in and I'd model something like this. And of course, I'd have to decide how I want my risk. How wide do I want my wings? Let's just look at 10 points initially. So that's 6,000 on the upper side. And then again, I believe I was thinking somewhere around this 57.75 or so on the lower side. So let's drop this down to 57.75. Now this is going to be a very wide condor. I don't know that this is, that this works out. Is a decent potential trade in my mind. So let's just narrow this range a little bit. So a condor like this is going to give us a pretty wide range. Now, one of the things that you will notice right out of the gate is this condor has negative delta when it's an equal condor. When my wings are the same on both sides, I have negative delta, meaning this is going to benefit if the market pulls back a little bit. So what if I didn't want that? What if I wanted more of a flat T0 line, because I don't know if the market's likely to go up or down from here? Well, one of the things I can do here is I can come in and I can tighten up this upper wing a little bit. So now I've got a 5-point wide condor on this side, and I still maintain a 10-point on this side. Now, that does give me a little more risk to the downside, but it dropped out a lot of risk to the upside. And we can see now my T0 line is a much, much flatter T0 line. So always keep the thought concept of having your iron condors be asymmetrical. They do not have to be symmetrical with the same wing width on both sides. So this is just a concept trade. I'm going to go ahead. I'm going to save this trade, and I will go ahead also copy this, and I'll share the link in the show notes below. You do not have to have an OptionStrat account to open this. Simply click that link and this trade will open for you to take a look at and for you to slide those strikes around and maybe change it and modify it to something that you would like to model or paper trade yourself. So that's going to wrap up the weekend update here for June 1st, 2025. If you find this content to be of value, please give me a thumbs up, like, and subscribe. Feel free to give me any comments below as well, because I always take a look at those. Okay, so those of you in the alert service know that I've been working on a new trade that I'm officially calling the Flyagonal. This is a combination of a butterfly and a diagonal. We just entered one on Friday. I put out all the information on that in the alert service. If you're interested in being part of the alert service, I'm putting a link on the screen here below. You can check that out. I try to keep that very affordable, and traders can follow along with my exact entries, adjustments, and exits in these trades. And I really only check in on the market the first hour of the morning and then about the last 90 minutes of the day. So if you're working or whatever, this is not something that you need to be tuned into every hour of the day. And these trades might be open anywhere from 5 to 6 days to maybe 20 days, somewhere in that general range. So as it relates specifically to the Flyagonal, one of the things that you'll notice here as we take a look at these results, I have made 11 trades. Now, these were all not part of the alert service. This is some of my personal trading I've been doing on the side to try to fine-tune this concept a little bit. They've averaged $150 in profit, so those trades now are up $1,651. And there's so far been 11 out of 11 winners. These are those various winners right here. So these are the stats on this trade that I've been trading for approximately 20 days or so. We can look at the equity curve on these trades. So really nice equity curve. That's pretty darn good. And of course, as a trader, I love to see that, but I also have to realistically understand and know that's not going to hold up. There's going to be dips along the way here. But if in general we see a move from the lower left to the upper right, that's what I'm all about. This shows the bar chart of the different trades and each individual trade's profitability at this point. This last one here is the current open trade that was just opened on Friday. It is up a little bit, not big at this point, but it is up. So that's, of course, always nice, only being in that trade for a few hours at this stage. So looking at the trades that are open, there's this one, which is the brand new Flyagonal that I just opened. And again, the goal here is to just have this T0 line kind of mound up over the next few days and get out with 20, 25% or so gain in that. The beauty of this particular trade as I see it, and I should point out that I've used a lot of AI in helping to develop this trade as well. I've got some AI models that I'm querying the heck out of about the best configuration for butterflies, for diagonals, how many days, how far away from the current market. All of those things are being analyzed and helping me fine-tune this concept. But the nice concept about this trade is if our market goes up, volatility drops. When volatility drops, the T0 line will tend to mound up in the tent of the butterfly. On the flip side, if our market goes down, the diagonal here is a positive vega trade. So when our market goes down and volatility picks up, this tent tends to get larger and widen, bringing in more profitability. So to me, the key concept to this trade is I'm using two separate components, diagonal and fly, and I've positioned each one of them in a way that's going to take advantage of a market move in their direction. So that's the concept behind this. It is a trade that I plan on continuing to refine going forward, continuing to share in the alert service in the community, and of course, continuing to track and monitor and fine-tune along the way. So that's the current trade that's open. I'm sure I'll be opening another one of these this next week. And this one may even get to that, 20% profit or so during the course of this next week. And I'll end up taking this one off. But I'm not also concerned about having a second one open at the same time. So I may very well open another one of these later this coming week. And if this one hasn't closed yet, both of them could in fact be open at the same time. So Lucid, I know I've said this before, but I'm going to start taking a serious look at this. This one simply is not moving in a reasonable time frame that I had expected. I've now been in this trade almost 100 days. I would have expected it to pop and be in a profitable state by now. The fact that it is not is making me do a deeper dive on this and deciding whether or not to pull the plug. I also will be launching a new wheel trade this week. That's where I sell puts in a given stock with the goal of ultimately getting assigned that stock Once I get assigned the stock, I will sell calls against that position to eventually phase out of it. But in the meantime, I'll be collecting premium on the put side when I sell those puts to get into it. Then I'll be selling calls to take an additional premium, all the time lowering the cost basis of that stock. Again, you'll see that entire process play out as part of the alert service here. I will be doing analysis later today or early this week on a series of different stocks that students have recommended, and we'll select one of those to start the wheel process at some point this week. So that wraps up the game plan here for June 1st. A little bit of analysis of where we've been, where we're heading from here. And again, if this is of interest to you, look at the URL below. Feel free to check it out in more detail. Also, give me a thumbs up, like, subscribe if you find this to be helpful. Thanks so much, everyone. Take care and have a great week.